I intended to talk about the persecution of Ricky Vaughn and the so egregious prosecution being brought against him over memes, but this GameStop stuff is just continually getting more and more crazy. And frankly, I think that the two stories are pretty linked at this point. In both cases, the prosecution of Ricky Vaughn over clear free speech on Twitter is similar to the assault on free speech being directed at r/Wall Street Bets. Discord shut them down yesterday, although apparently it seems like the Discord is back up, and they of course shut down for hate speech. The corporate press was trying to smear Wall Street Bets as a white supremacist subreddit that was trying to attack, Jewish bankers. And ultimately, the only thing that they were able to do to try and defeat these guys was not just shut down trading for GameStop and a lot of these other stocks like AMC that they've been targeting to try and prop up, but they all they did was your retail trading apps like E-Trade and Webull and Robinhood in particular, the big day trader app. I've made fun of Robinhood users before. However, this week I happen to be on their side. All these companies, all these big brokerages that deal with the retail crowd said, yeah, we're not going to let you buy any more GameStop or any of these other stocks. You can sell, though, if you want to, so go ahead and do that. So at that point, the only people who were left in the market were the shorts on Wall Street, and the retail traders who wanted to get out of GameStop. That's all they let you do. And considering that, I'm pretty impressed that GameStop was able to hold to right around $200. I think it was $196 it closed at today, but it hovered around the $200 to $250 range for most of the day. And of course, just after the market closed, Robinhood announced that they would be allowing some limited trading of GameStop and these other stocks. And in after-hours trading, then of course GameStop shot back up to $250. I'm not sure exactly where it's at now, but needless to say, without this clear market manipulation, GameStop would probably be pretty darn high. Certainly a lot higher than $250, I would think. Now, what I love about all this is that, this is even more so than what I talked about yesterday. My title yesterday was that all this GameStop nonsense is exposing the absurdity of Wall Street, because, the GameStop, situation itself is absurd. You have these people bidding up a company well above, what it should be worth. No reasonable person would want to pay over $300 a share for GameStop. But when you compare that to the whole overall market, in principle, it's not that different, because the whole market's been overvalued. The value of all these stocks have been going up, despite their earnings not going up much at all, or in many cases declining. But that, in and of itself is kind of an esoteric point that, your average person is not going to be able to see black and white if they just skim over this, just see one news story about it, or just read one article about it. But what happened today with these retail trading apps just shutting down the buy side, only shutting down the bulls and giving the bears, for once, free reign in the market, it's the most blatant stock market rigging any of us, I think, have ever seen. Because, even though it's obvious that when the Fed rigs the overall market, that they're just injecting new free money into the stock market, there's at least a they have to launder it through some commercial banks and stuff, and the primary dealers and all this, and it's a cloudy and vague and sort of opaque transfer mechanism. Today, the entire world was told by the financial establishment, by the financial press, by the financial institutions, that the little guy is not allowed to win. It's a very clear message that was put forward. They said it explicitly on TV. They've been saying it on CNBC all week, and now they've acted, even though they might be risking SEC fines or class action lawsuits. There's already been a class action lawsuit filed against Robinhood. They don't care because they know that by the nature of regulation, the people who regulate industries are essentially lobbyists for the biggest players in that industry. I mean, this has been, anyone who's read Kolko or Rothbard understands this. This is the nature of the history of regulation. And the corporatists over in Europe were very explicit about this. That yes, it should be the biggest players in an industry who collude with the government to shut down their competition, to make sure that the little guy doesn't win, because all of this cutthroat competition can lead to chaos in the market. But here in America, they normally couch their rigging in more humanitarian terms. The rigging is normally done in the guise of consumer protection. And sure, there's some murmurs about that here. People like Andrew Ross Sorkin of CNBC saying, "Well, I'm just worried about these retail investors. They don't know what they're getting into. Taking on the hedge funds head on. I mean, they could get hurt." I mean, nobody's buying that BS this time. I guess the only person who's still kind of taking this old school progressive controlled opposition line, classic triumph of conservatism fashion, would be Elizabeth Warren. She's coming out and she seems to be very much against Wall Street bets, but acting like she's their savior. Her quote today is, "Oh, well, there's got to be a cop on the beat." And by that, of course, she means there's got to be a cop on every corner to beat down ordinary citizens who might get a little too uppity. Now, back to another question that I was trying to answer yesterday, which is, where do we go from here? I was somewhat, taken aback yesterday. I've had a little bit more time to think about it today. Of course, the French Revolution comparisons are being brought up by the very, by the beleaguered Wall Street elite. But, fortunately for them, I don't think that this is that severe. I think that is obviously a pretty strong overreaction to the week's events. However, what I do see this as is a potential opening salvo for the coming market chaos. After all, this nonsense with GameStop has been enabled by the Fed, as I talked about yesterday. Wall Street had already made its bed. And now it's time for it to lie in it. We've been in a melt-up at least since last March. But it's been a melt-up that's been controlled and planned by the central bank in close coordination with their allies on Wall Street. This GameStop rally, however, was not a part of the plan. That's the only reason why it's even making the news. If this was a part of the plan, you would not see them complaining at all. In fact, they would all be cheering and patting themselves on the back, while the small-time investors who were not in on the plan, would be the shorts in that case. In that situation, they would be the ones getting creamed. They would be the ones getting squeezed, because that, of course, is what happens every time that people try to short the market based on the fundamentals, because if you're looking at the fundamentals that supposedly guide this so-called efficient market, you should be shorting almost everything. So coming in the future, at this point, it's hard for me to see a situation in which we avoid asset price hyperinflation, which we'll see long before we ever see consumer price inflation. I think that our stock market is going to look a lot more like the Caracas stock market in due time. What that means is that what is happening right now with GameStop, the very violent upward trajectory of it may very well occur in a lot of other areas. And that, of course, will be because of the federal government's stimmy checks that are going to continue to be mailed out. Something that I did not discuss yesterday because, I mean, there was so much news. I didn't even get to the fact that there was a Fed press conference. Powell sounded more dovish than ever. It was the most dovish Fed press conference in Fed history, probably. Saying, of course, that he was super duper sure that they were not even thinking about raising rates anytime in the next, 50 years, basically. That means unlimited liquidity for the stock market. Markets sold off on that news. That was not enough because, all of that dovishness was already priced in. So they need they need even more liquidity. They need more and more. And so that means that if the Fed cannot, the Fed being all in is not enough anymore to keep propping up this market, they need hopes of more stimmy checks. They need that retail investor to get their Biden bucks and to take that whole entire check and dump it into their Robinhood account. And preferably, they'll all take their $1,400 and however much money is paid out in checks later on, and all buy SPY or QQQ. Instead of buying, the most shorted stocks, which causes some problems for the Wall Street guys. They very much don't like this level of sophistication in retail investors. What they want are what Jim Cramer, used to call moron longs, i.e. the kind of people who listen to Jim Cramer's TV show. People who buy the stocks that they're told to buy, and who, again, preferably buy index funds. They want the entire market to rise in unison, and the few names that are allowed to be shorted, who are not consistently jammed higher, they need to be allowed to fail. And to me, since I've always seen the problem being on the long side, I always thought of a rebellion as necessarily coming in the form of, a mass shorting of everything, not a short squeeze. It never occurred to me to target, one of the only shorted stocks on Wall Street to try and squeeze the hedge funds that were shorting it. But because of the nature of this move, it's a much more targeted and surgical strike against the financial establishment. So, with that said, if you gain anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. If you haven't already, please do subscribe because I do upload every day and I'd hate to have you miss one. So, I'll see you folks back here tomorrow.